Hello friends, welcome to BISP Solutions. My name is Basan and today I'm going to show you another case of Oracle FCCS, that is consolidation of financial statement in case of various subsidiaries and associates. So let's start. So before we going on to application, first we see the Excel. So in this Excel you can see we have one holding, that is U1, and we have two subsidiaries, that is U2 and U3, and we also have associate, that is U4. So it have the 100% ownership in U2, and U3 it have 60%, and for associate, and it is also called equity, we have 40%. So before we jump to the application and do the consolidation, first I will show you the calculation of goodwill and for minority interest, and especially the retained earning. Okay, so let's start. So you can see this is a balance sheet, and you can see various cash figures, investments, and so on. So I will show you the investment which we have done in subsidiaries, that is U2 and U3. We have done 12,000 in each of them, and in U4, that is the equity company, so it comes in equity US4, that is 12,000, and as you can see. Okay, so the sum of the two subsidiaries is 24,000 as investment and 12,000 for the equity company. Okay, so I will firstly show you the calculation goodwill for our subsidiaries. So the investment comes to the 24,000, as you can see, and for net asset I will show you the calculation. So we have to take the stock. So stock of U2 is 10,000, and we have 100% ownership, so we take 100% of it, and we have 10,000 in U3, and we have 60% stake, so we multiply 60% of that, and it comes to 16,000. Okay, so to get the goodwill, we just have to take the investment less the net assets, and our goodwill will come. Okay, so before I show you the calculation of retained earning, I will show you the calculation of minority interest. So we take the stock of all the minority people, that comes to, I will show you the calculation again. So we take the stock of U2, and we have 0% for the minority, so we take 0%, or you can skip that also. And for U3 we have to take 40%, as 60% is with the controlling party, the holding one, so 40% come as a stock. And for retained earning we will just do the similar thing. We take 0% of U2 plus 40% of 3,000 retained earning for the minority people, so it comes to 1200, and sum up to 5,200, as you can see. Okay, so let's move on to the retained earning. It is the most important one. So to calculate this, we take the holding of our holding, the retained earning of our holding, so that comes to 7,000, and we take the retained earning of subsidies. Let me show you. So we have 3,000, and we have 100% stake in this, so we take 100% of it, so multiply 1, and we have 60% in this U3, so we take 60%, it comes to 4,800. And for associate we calculate retained earning like after this. So we have 3,000, and we have 40% stake in this, so we multiply by 40%, and it comes to 1,200. So in associate case, our retained earning will come in our balance sheet only. As you can see, you can take full-fledged balance sheet also for the associate, but we don't need that. We just have to need the retained earning of the associate. So in our consolidated balance sheet, only our associates retained earning will come, as you can see, and it will sum up with the investment, and also it comes to the retained earning. So let's quickly jump to the application and do the consolidation. Before we connect our application through a smart view and put the figures, first we will have to give the ownership structure. So to do that, you have to go to consolidation. I'm already there, so find our entities. So as you can see, U1 is our holding, U2 is subsidiary, and for U4 we have to make it 40%. So I have done it. So it will automatically take it as equity. So save it. Before you putting numbers, you have to see the scenario, year and period for the same. Click OK. After saving, you have to recompute it. So it's in progress. Okay, it is done. So let's quickly connect our Excel through Smart View and with our application. So we have to, just go to connection and select your entity. So I've already connected it. So this is our POV. One second. Okay, so here it is come. Okay, so this is our POV and you have to see the POV correctly before putting numbers. So our scenario is actual and you can see all the POVs I have already selected. So this is our smart view. So I put the cash figure as 27,000, or you can see in our balance sheet also, which I showed you earlier. As you can see, I will put these figures. So I will quickly copy it. Just click submit. So I will quickly put the figures and show you then. Okay. Okay. So as you can see, I have put it the numbers in our smart view, and as you can see, I have not put the common stock for the associate. We just have to. The important thing is we just have to take the retained earning. Okay. So and this is our P&L. I also put in the number in this. So as you can see, this is our revenue and total net income will come to 7,000, 3,000 and 3,000 and all our subsidies and associate. Okay, so quickly do the consolidation. Go to the application, go to navigator, go to data, and one more thing, I put in the numbers for investment. So for subsidiary, we put the investment in the ICP of intercompany of U2 and U3, that is 12,000, and for equity company we have to put in equity company ICP U4 12,000. Okay, so let's go to consolidation data status. Yes, is our entity and it is showing as impacted. So go to actions, go to business rules, click consolidation. So this is my entity U underscore 100. That is the parent, super parent, in which our consolidated figures will come. And the period is January, scenario is actual, and financial year is FY15. Okay. Launch. It is processing, taking a bit time. Okay. So it is run successfully. Okay. One more thing, you can see that in our data status sheet it is showing us okay, so our consolidation is successful. So let's quickly go to our balance sheet and I will show you the consolidated figures. Okay, so let me quickly like cross check with you the figures in our balance sheet and our smart view balance sheet. Okay, so this was our balance sheet. So cash should come as 53,000. Okay, so cash will come as 53. Yes, it is coming. And okay, and for investment in equity we should have 12,000, and for investment in equity income it should come as 1,200, as you can see. So let's see that. Okay, yeah, it is coming as the same. Okay, and quickly go to the goodwill. Let me see that goodwill is coming as 8,000 or not. Yeah, it is coming. Okay, so it is coming as 8,000. Okay, and for stock, In our consolidation case, the stock of parent will come, and else all the things will get eliminated, like the stock of subsidiaries and other things. Okay, so let's see, stock is coming as 20,000 or not. Yeah, it is coming as 20,000. And one more thing, we have retained earning, that is 13,000. As you can see, the total is comes to 13,000. Okay, so let's see. Yeah, our retained earning is also coming as 13,000 total, and our minority should come as 5,200. Okay, our minority is also coming as 5,200. So this was our balance sheet, and it is totally balanced. And this is our the total consolidated balance sheet, and it is also balanced. As you can see, we don't have any difference. So this was the case, and I will show you the eliminations also. So as you can see, we have stock. We have, for goodwill, we have to eliminate the stock. So the stock is being eliminated, as you can see. Okay, and these are the proportions. You can see how the proportions are being done. So through a smart view you can see all the figures, and this was our case. So thank you for watching, and if you have any doubts or queries, you can connect to our company website, that is bspsolutions.com. So thank you, have a good day.